Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The US faces a federal government shutdown as markets start to realise Trump has no problem being reckless and has no problem hurting his friends. But first, there was another Pulse dairy auction overnight, and that brought marginally weaker prices for both skim milk powder and whole milk powder, down a bit less than 0.5% in US dollar terms. In fact, these prices are now at their lowest level of 2025. But because the New Zealand dollar is falling, the prices achieved actually rose about the same amount in local currency. In the US, the number of job openings in August were virtually unchanged from July at 7.2 million, as was expected. But the Chicago PMI fell yet again in September, well below market expectations it would improve. And the dip was sharp, the most in 3 months. Also weaker was the Dallas Fed services sector, with their retail sector retreating rather fast in an unusual move lower. Adding to the downbeat sentiment was the September report from the Conference Board, showing consumers are glummer than at any time since the start of the year. A common theme in the survey responses is the impact of rising inflation. And the downbeat sentiment may well get worse, and quickly. The White House seems to relish a full government shutdown to start their fiscal year tomorrow with mass firings rather than furloughs. And Trump says some American cities he considers dangerous should become training grounds for American troops, proposing his troops be used to fight other Americans in their home cities. It's getting toxic very fast there. For their economy, there's a real possibility now that the weekend's non-farm payrolls release will be cancelled because the department releasing it will be closed. If that turns out to be the case, it could mask some quite weak results. Analysts now expect less than a 50,000 job gain. Financial markets are downplaying the risks of all this, mainly because there have been many shutdown crises over the decades. But at least the earlier ones involved parties prepared to reach a deal. Maybe not this time. Across the Pacific and China, their factory PMI contracted again. But even though it is the sixth straight monthly contraction, the pace of decline was the least in that time. Their factory PMI rose in February and March, but only by marginal levels. Their official services PMI for September is no longer expanding. These official PMIs have been more conservative than the private surveys by Caixin, probably because they have a heavier weighting to Chinese SOEs. The private surveys are more attuned to private and foreign enterprises, surveyed by S&P Global, and they report a faster expanding factory sector and solidly expanding services sectors. Meanwhile, China's frozen imports of BHP's iron ore in a pricing dispute. BHP is their third largest supplier after Rio Tinto and Brazil's Vale. And Taiwanese consumer sentiment rose in September, but to be fair, the bar is low because it had been stunted since May. In Europe, Germany said their CPI inflation edged up to 2.4% in September, marginally above the August level. But it was a rise that was slightly more than expected. In Australia, there were no surprises from their central bank, which held its cash rate target at 3.6%. But even though this hold was all priced in, there was some surprising reaction in financial markets. Somehow the decision was regarded as hawkish, and the Aussie dollar rose and benchmark bond interest rates fell on the news. The strong currency remained, although the bond move was later reversed. And global air cargo volumes in August grew by 4.1%, driven by a near 10% rise from a year ago in the Asia-Pacific region. But notably, North American air cargo volumes fell 2.1% on the same basis in August, the weakest global region. And the pattern was similar for passenger travel. Asia-Pacific and Latin America brought strong growth, underpinned by a 4.6% expansion. But North America lagged here too, up only 0.5% from a year ago. And the US Treasury 10-year yield is now at 4.14%, unchanged from yesterday. And the price of gold will start today at $3,846 an ounce, up $16 from yesterday and a new all-time high. But silver is 50 US cents softer. American oil prices are down another 50 cents as well, at just over $62.50 a barrel, while the international Brent price is now just under $66.50 a barrel and down more than $1. And the Kiwi dollar is now just on 58 US cents, up 20 basis points from yesterday. Against the Aussie, however, we're down 30 basis points at 87.6 Australian cents and a new 3-year low. Against the euro, we're little changed at 49.4 euro cents. That all means our trade-weighted index starts today at just on 65.1 and unchanged from yesterday. And the Bitcoin price starts today at $112,876 and down 0.8% from yesterday. Volatility over the past 24 hours has been low at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.